Hello. So today I want to show you a little bit what happens when a company reports good earnings. We've seen this quite a bit lately, but the stock still moves sharply lower. So we're looking at a chart right here for Etsy. And I wrote about this for MarketBeat not too long ago. Now, the business case for this company remains strong. Let me just look here. I have the earnings written down. Earnings per share came in the most recent quarter. I mean, you could see exactly right over here when it did report earnings, right? Came in at $1 per share. That was versus Wall Street consensus estimates for 97 cents. So it beat estimates. Revenue, $550.6 million versus expectations of $530.4 million. So it beat on revenue as well. Gross merchandise sales, one of the key metrics for a company like Etsy, of course, $3.14 billion versus expectations of $3.04 billion. So it beat there as well. And that was also better than $1.4 billion in the year earlier quarter. Let's see how those earnings stacked up against a year ago. Okay, so over here you see dollar per share. That's for the quarter ended in March, 10 cents a share for the quarter ended in March 2020. Now, you see that year over year earnings growth was already declining prior to the quarter ended in March. What happened March 2020, that was it was the month that everything got locked down initially. The big panic began to take hold. Nobody knew what was going on. Nobody really knew how serious COVID was going to be. And of course, it was very serious. But nobody knew how the economy was going to react, how contagious it was going to be. Remember, people were going around in gloves and didn't want to touch anything. People were in hazmat suits. Nobody knew anything a year ago. And obviously, we're in a much better situation today. So you do see that earnings decline had already begun. So this quarter, it trounced estimates. 900% higher. You can easily see that. And we have triple-digit revenue growth recently. So everything looks good. Analysts expect full-year earnings per share of $3, 12% increase. That was revised lower just recently, just after the earnings report. $3.65 for 2022. That would be a 22% gain, also revised a little lower. Okay, so what sent the stock lower? Well, one thing that happened was Etsy said it expects slower growth in the current quarter for revenue and gross merchandise sales. And executives said revenue should be between 15 and 25%, and gross merchandise sales between 5 and 15% year over year. And, that falls short of the triple-digit growth in 19 and 20. That right there is the issue, okay? We're seeing a lot of places right now with some of these growth stocks, these newer stocks. I mean, Etsy is a newer stock, went public. Let me go back here to a monthly chart, went public back in 2015. So it's still in that stage of its growth where it's still new, still has a lot of room to run, just historically based on what growth stocks tend to do. But what Wall Street has been doing this quarter, I'll show you another example in a minute of Netflix, overestimating the kind of growth we're going to continue to see after these stocks were just kind of priced for perfection. So it is pretty interesting to see that maybe Wall Street's expectations were out of line here. Let's go back to look at Netflix. Obviously, same thing right here. You can see where it reported earnings, and that just, drop it like it's hot. You can sing that song to yourself now. I've just given you an earworm. Now, as you probably know by now, Netflix added millions of subscribers during the pandemic, and Wall Street expected those high rates to continue. And that's a really tough thing to do, and that did fizzle a little bit in the most recent quarter. I will show you the earnings themselves. You did have triple-digit earnings growth. You've had a nice string of double-digit revenue growth over here. And in the case of Netflix, analysts actually adjusted their estimates higher. Now, the company did say that it expects growth to resume on a fast pace in the second half of the year as new content is rolled out. You know, it seems like there's been a lot of new content the whole time, but in truth, as we know, a lot of productions were shut down last year, so that's going to be ramped up. I will be very happy to see Grace and Frankie come back, by the way. They're on to start recording again this summer. Yay! Okay, so another thing too, though, that occurs to me, the companies themselves may be sandbagging a little bit here, right? In other words, they may be downplaying their expectations, kind of in the hope of, hey, we beat expectations in the next quarter, and look, our share price got rewarded. That is not unheard of. Is it a little market manipulation? Yeah. Does it happen all the time? Yeah. So are Etsy and Netflix still good buy candidates? I would absolutely say yes. You know, in both of these cases, we're forming a consolidation. You see that here. Let's go back to Etsy on its weekly chart. You know, much sharper fall in this case. You know what, though? A consolidation does provide an area where investors can get into a good growth stock or even a value stock, any stock really, at a lower price, okay? Take advantage of that. You'll shake out some institutional holders that are lacking in conviction. That's what happened here. Or are just taking profits, right? I mean, let's take a look at the monthly chart right over here. Not at all unreasonable that some of these holders are taking some profits after this big run up. Would completely make sense. Also, you have, let's see, the big rally here began in April. You also might have significant holders who owned shares who are selling after that 1 year mark, that they would now be in the realm of long-term capital gains that are currently, at this time, taxed at a lower rate. So you might have a few things going on here. Nonetheless, as I was saying, the consolidation offers a great time for investors, would-be investors, to just watch the shares, watch to see where this gets support. It's clearly below its 200-day moving average at this time. Watch to see what happens as the stock moves higher. Watch to see if volume picks up as that happens. No big rush to get into this at this point, but ultimately, yes, I am confident in saying this one is going to return and be a buy candidate at some point, and I would say the same about Netflix at this point as well. All right, thanks so much for watching. Catch you next time.